Yeah. So it is 10:18 and 40 seconds right now. So we're looking at the February contract. We're trading at 52.21. We got some action, almost $1 in both directions. Up at 4 in the morning, we're trading at 52.40. We trade down all the way almost to 51.40. Yeah, lows of, where are we? Low 51.47, and we're back 52.18 about. I was jumping in here during the break, looking at maybe some volatility trades that we could set up. What happens is, if we jump to the 11 a.m. expirations, they're going to be a little bit off center of where, whoops, I'm in the pound there. As I was looking, we'll go back into commodities. If you jump to the 11 a.m.s, 51.75 is a price point that you could have exposure in both directions, or you could have 52.50. Either way, we're about 30 cents away from those price levels. Jump to the noons, you have $52 as an option. We're still going to be 20 cents away to the bullish side. So if you're a little bit bullish, not the end of the world. It might even be advantageous. But you can see, just pulling up the bullish spread alone, because you have the 20 cents of intrinsic value plus the premium in there, it costing you about $36, $38 to the upside. And then your similar trade going from 52 down to 50.50, you'd be selling this. It's out of the money, all kind of premium of 22. So you're looking at about 60 cents, $60, which represents 60 cents of movement.
And you hope it's on the upside if you did it.
And something to consider here is that, okay, you're paying 60 cents. Some may say, okay, that's all right. What if oil really pops? If you're only closing out one side of this trade, you're capped out at 150. So you really got to be aware of that. You know that, wow, I'm putting up 60 cents, right? But I'm capped out at 150. That's a lot of premium. Now, keeping in mind also, though, that if you plan on closing out both sides, then yes, you do have more exposure. Maybe you get the move in one direction, you close it, you get the move in the other direction, but just something to consider. And then what you could do, though, is you could jump to the dailies, which also have 52 as an option. Now, these have till 2:30 as opposed to till noon. Okay, there's our similar bullish spread. The last one was going to cost us 38. This one's costing us about 47. Yeah. But you got $5 of exposure now, and you got till 2:30. Now, the reason why is because a lot of that premium's built in for the numbers coming in exactly 9 minutes.
Exactly.
Right? So they're not assigning a tremendous amount of premium from noon until 2:30, because you can see from 38 to about 47, right? So that's where you just need to decide your market bias. Is it worth it? You could have a type of volatility trade, and you can see the bearish one, instead of about 20.22, you're looking at 30 cents, $30. But two of them taken combined, you need 77 cents away from 52. Yep. And again, though, you do have $5 if you really got something magnificent that happened in the market, and you have until 2:30, which is really the majority of the premium you're paying for is that time, because the odds that oil moves more than $52 is not very high. It's greater than zero, but not very high. Right. Yeah.
Let me just pull this contract up, see what we. Well, this is a delayed contract too, folks. So let me see. Oil. Here we go. So. Intraday right here. Okay, so first push early had some volume. Yesterday we did. Yeah, interesting. So my take is that we're going to back down a little. Okay. You know? So that would be trouble because of the first one with that bullish bias, really.
You know what I mean? So just because, right, you're saying the premium, the intrinsic value, that's the way to put it. The intrinsic value you're paying for is to the bullish side. Right. So if you're a little bit bearish, you don't want to be paying intrinsic value on the bullish side, right? But, so here's where you get used to what you're doing, right? Yeah. You could go back in, even if you wanted to play that pop. There's your 11 a.m.s. You can use 52.50, okay? Yeah. So if you wanted exposure in both directions, there's your bearish trade. There's where your intrinsic value is. And we're talking about 34 pennies of intrinsic value, so it's much more bearish than even the other one. Right. But if you're bearish, this would allow you, and you're selling the market at 52.08, and the market's only at 52.16, so you're only selling at 8 pennies below where the market is, right? So that's kind of your premium. And then if you really wanted exposure, though, there's your bullish spread, which is just going to be all premium right now of 13. So you're looking at $54, but it's geared towards a bearish bias for sure. With
54 with you get
52.50 being your point.
That's nice. So you can see that 43 cents out of the 54, though. You're right? Would that be
37, excuse me, 33 pennies of intrinsic value, right?
Okay,
52.50 is our point. We're trading 52.17. So you'd need it under 50, but you can see, right, you only need it. And the reason why is because you only need it to cover this side. If you go, you know, if this one becomes the one with money, with value, well, you only got to make up this side of it. As in, it's only going to move 13, 15, 20 pennies. But if this one becomes the one that becomes the one with value, you got to make up all of this investment on the other side, and that's why they'd be a little bit bearish. But we get those numbers in 6 minutes, and we got oil trading at 52.16, and let's just put it on even like a 4-hour, man, because man, what quite a move, right?
Oh yeah.
Going back to like the middle of December 13th, we're trading right up. Well, even where are we there? December 17th, we're trading right where we were, and we made it all the way down to $45, $44, and back.
Welcome back, folks. We had, let's see, numbers. We got numbers. Drawdown of 2.6 million barrels.
That's going to be the headline. I'll pull it up here real quick. We'll pull it up. But the headline is you saw a draw of 2.68 million barrels for crude. Distillate inventories rising 2.97 million. Gas inventories rising 7.5. A little bit bigger across the board, but they did expect crude to decline, and they expected the gas and the refined products to rise. Jumping back to the charts, seeing how the oil market is reacting. Nothing too dramatic right off the bat, right? We were kind of hovering at this level. You got oil sitting 52.20, almost no reaction whatsoever.
Wow. And
to pull over, why not? While we wait for that market maybe to react and dig into what we're dealing with. So this is a full breakdown to illustrate what we're looking at. This is the current week's numbers that we just got right here. This is the previous week. And these are the changes, which is usually the only thing you ever see, right? Where we saw a decline of 2.6. This is 2.6 million barrels. Gasoline, we saw a rise of 7.5 million barrels. There's your distillate. We saw a rise of 2.97 million barrels. And then we have, of course, other total fuel. Ethanol, pretty marginal when you're looking at kerosene. Why don't we get more kerosene numbers, man? No, jet fuel, right? And resident fuel oil. But the headline number, and the reason why, I mean, you're looking at, is that a billion? Because if it's probably going to be $1 billion in terms of the supply, because this represents 2.6 million, so that's going to be, you know, you're dealing with billions.
Look at that, billions times.
Oh, right.
Yeah, times 52.
Yeah.
Wow.
And so to put this back, you know why it didn't look like that? Because I had it on a 4-hour chart.
Okay.
There's a little bit more of a reaction.
Okay.
So it did spike up real briefly, but so quickly by the time we pulled up the chart, right, it was back to about 52.15. So we'll see how it looks. You were looking maybe for some negative action. And if that was the case, even the ones we were looking at, the biggers, you only needed action maybe below 52 where you got your break even just to make up kind of the bullish side of that. But as we usually see in this, man, the first move is not always the move that matters, and really sometimes it takes until 11 o'clock, 12 o'clock for that thing to take off.
Oil.
Yeah, checking back in one more time. So we were sitting at 52.20 coming into those numbers again, and we're sitting at 51.68 as we round out the hour. So basically, a lot of the ones we were looking at were the noons, the 2:30s. There'll be a lot more action in this market, man. So I just had to double check the chart again to make sure we were looking at 5-minute bars, just because they're mammoth, you know? I mean, just mammoth bars. The first one, 52.38 down to 51.98, but in the span of from 10:30, you go from 52.38 to by 15 minutes, you almost get $1 movement to the downside. Yeah.
That is pretty, that's wild.
It sure is, man.
Yeah, so that's not going to help the market generally.
And pretty interesting that we spiked, you know, right down to just this level we were hanging at this morning. And so we'll see as we get to that 51.60 kind of level. Just sat there from about 6:30 until about 9 in the morning.
Yep.
Yep.